Hey folks, this is your accountant Mansoor Suhail from Toronto, Ontario, and my specializations are taxes for Canada and USA. My presentation today is for educational purposes only. It does not constitute any legal advice or opinion. Please do not use any of its contents without seeking a professional advice. And I would be talking about selling a business through shares by purchase of shares. In a sale of business through shares, entire business passes to the purchaser and vendor is no longer connected to the business. Any profit on a share sale is a capital gain for the vendor, which is taxed at a favorable rate. When the purchaser acquires a business by sale of shares, the purchaser acquires a business by share of sales. The purchaser also acquires any unrecognized problems. If there are tax losses in a corporation, purchaser can use these to his benefit. With share sales, it may be easier to carry on the business without any apparent interruption. A person or a company that buys a business by buying its shares acquires all existing and potential liabilities. The shares are purchased as a personal capital asset, and thus the purchase price becomes the cost base for future capital gains calculation. Contents that go into share sale purchase agreement. The parties need to be clearly identified. The number and class of shares being purchased must be stated. The corporation's recent financial statements and detailed lists of its assets should be attached as a schedule. The vendor must warrant that there are no outstanding claims, liabilities, or other potential impediments to the sale that have not been fully disclosed to the purchaser or his or her representatives. The vendor warrants that all necessary federal and provincial corporate and tax filings have been taken care of. The vendor agrees not to open, manage, own, or advise a competing business in a defined territory for a certain period of time and after closing. Searches and review before closing. A share sales requires more searches than an asset sale because it involves searches related to both shares and assets. Corporate searches. The status of the corporation whose shares are being purchased needs to be ascertained via corporate searches. If the vendor of shares is itself a corporation, searches will need to be conducted to ensure that the vendor of shares has been in existence through its ownership of shares being sold. Minute book. Minute book is reviewed to ensure that all the statements made in the agreement of purchase and sale are true, that there are no undisclosed restrictions in the corporation's articles that limit the types of business the corporation can carry on, that there are no other unusual provisions in the articles, that the corporation's authorized capital and the rights, privileges, and conditions attached to its shares have been properly passed, and that all shares issues and transfers have been completed in the correct manner. Financial statements review. The purchaser's lawyer or accountant will review the corporation's financial statements and records to ensure that corporation's finances are in order. Contract review. All contracts to which the corporation whose shares are being purchased is a part should be reviewed by the purchaser and purchaser's advisors where appropriate. The purpose of this is to ascertain the corporation's legal responsibilities and liabilities, which of course will remain unchanged despite the change in ownership. Personal Property Security Act search. Purchaser's lawyer will undertake this search not just against the corporation to verify statements made in the agreement of purchase and sale concerning the corporation's indebtedness, but also against the vendor to see whether the shares are being used as security for a loan. Bank Act search. This search is undertaken against the corporation whose shares are being purchased. The purpose is to ensure that corporations' share assets are unencumbered by a Bank Act registration. Execution search. This search is done against the vendor to ensure that there will be no claims against the shares. Bankruptcy search. This search is done to ensure that the purchaser is buying shares in a solvent business. Corporate income tax filings. Purchaser's lawyer will contact Ministry of Finance and Canada Revenue Agency to ensure that all necessary corporate income tax returns have been filed and that there are no outstanding taxes, interest payments, or penalties. A change of control or ownership triggers a financial year end for a corporation, in which case the closing date for the share purchase should coincide with the normal financial year end, or there should be undertakings and a purchase price holdback sufficient to ensure that any amounts due to the provincial and federal government will be paid in full. Any tax loss carry forward should also be confirmed because this is sometimes considered as an asset of a benefit to purchaser who has plans to use it against future income. Real property search. When a corporation whose shares are being purchased is the owner of the real property, a search should be undertaken to determine whether there are any mortgage or other debt instruments on title. Documents that are required on closing. Resolution and registrations. A shareholders or directors resolution approving the share transfer. Resignation of the officers and directors of the corporation after closing. The purchaser appoints new directors and these will appoint new officers. Share certificates. The share certificates for shares purchased must be delivered by the vendor on closing. The back of each certificate is endorsed by the vendor to indicate the transfer. Warranties, covenants, and undertakings required by the agreement. As in an asset sale, there may be warranties, covenants, and undertakings that the purchaser wants to ensure do not merge on closing. The purchaser will therefore require the vendor to deliver a separate document confirming their continued existence. Income Tax Act affidavit. This affidavit is needed so that the purchaser may transfer the closing funds in full to vendor. Minute book, corporate seal, keys, and other items. The purchaser needs to receive the minute book, corporate seal, keys, and other items necessary for running the business. And after closing, folks, after closing, elect new directors and new officers, update the shareholders, directors, and share transfer register, file notice of change Form 1 with the ministry. All this information comes from the Fundamentals of Corporate Law and Procedure book written by Mark Wilma and Patricia McCann Smith, publisher Edmund Montgomery Publications Limited, Toronto, Canada. Thank you for listening.